What is up, everyone, and welcome back to Explain the Charts. Today is November 10th, 2025, and we're breaking down Microsoft, symbol Microsoft. There's a lot of conflicting information out there right now, so let's cut through the noise. On one hand, the fundamental news is overwhelmingly positive for the long term. Microsoft recently beat earnings expectations with a 23% rise in earnings and an 18% jump in sales. Analysts are extremely bullish, with all 61 firms polled by FactSet rating it a buy. We're seeing impressive price targets, with Guggenheim at $586 and Morgan Stanley raising their target to $625, citing strong growth in AI and their Azure cloud platform. However, the short-term picture tells a very different story. The stock is on a 5-day losing streak, driven by concerns over tech valuations, weaker-than-expected U.S. job data, and new tariffs on semiconductors which could raise costs. This has created a fascinating disconnect between the long-term outlook and the immediate price action, which is exactly what we're going to analyze on the charts. Looking at the daily chart, we can see the broader context of Microsoft's performance over the last year and a half. The stock has been in a powerful uptrend, rising from a low of about $345 back in April to an all-time high of $555.45. That high was reached at the very end of July, and this is where the story gets interesting. This massive price spike was a direct result of that strong earnings report we just discussed. Let's zoom in on that period around late July. You can see the stock gapped up massively, from around $515 to open at over $555 on July 31st. But look what happened immediately after: a huge sell-off on massive volume. This is a classic sell the news event, where the positive earnings were already priced in and large players took profits at the peak. The price then pulled back sharply over the next few weeks, finding a bottom around the $500 level before consolidating. Now, let's fast forward to the most recent price action. After rallying back up to test those highs in late October, the stock failed to break out and has since begun a significant move down. This directly corresponds to the 5-day losing streak and negative economic news mentioned in the headlines. The price has broken below several support levels and is now testing a critical zone around $495. This area acted as a consolidation base back in September, making it a very important level of support to watch. Switching to the 1-hour chart gives us a clearer view of this recent downtrend. Over the past week, we can see a series of lower highs and lower lows, which is a classic sign of bearish momentum. The price decisively broke through support at $517, then failed to hold the $507 level, which now acts as resistance. The selling pressure has been consistent, with each small bounce being met with more selling. This shows that in the short term, the bears are currently in control. Now let's drill down even further to the 15-minute chart for the last trading session on Friday, November 7th. The day started with a drop to the low of $493.25. However, the price did not continue to fall throughout the day. Instead, it entered a tight consolidation range between that low and about $499. This sideways movement after a sharp drop could be a sign of temporary stabilization, where buyers and sellers are reaching an equilibrium. The question is whether this is a pause before the next leg down or the beginning of a base for a potential reversal. So, let's recap what this all means for Microsoft stock going forward. The long-term story, driven by AI and cloud growth, remains incredibly strong, and that's reflected in the bullish analyst targets. However, the short-term technical picture is weak, and the stock is at a critical inflection point. Let's outline the key price levels to watch. Immediate resistance is at the psychological $500 mark, followed by a more significant zone between $507 and $510, which was the recent breakdown point. Above that, we would look towards $525 and eventually the all-time high of $555. On the downside, immediate support is the recent low around $493. This level is critical because it aligns with the September consolidation zone. If that breaks, There isn't much strong support until we get down to the September low around $430, representing a significant potential drop. For a bullish scenario to play out in the short term, we need to see the price firmly reclaim and hold above $500 on strong volume. This would suggest the current pullback is over and could signal a move to test the $507 resistance. Given the strong long-term fundamentals, I see this as a likely scenario eventually, but the timing is uncertain. The bearish scenario becomes much more likely if we see a decisive break and close below $493. This would indicate the recent sell-off has more room to run, and the next major target would become $430. Considering the current momentum and negative headlines, I'd place a slightly higher probability on this in the very near term, perhaps a 60% chance of testing lower levels before finding a true bottom. A third possibility is that the stock continues to consolidate in this tight range between $493 and $500 as the market waits for a new catalyst. The key thing to watch for is a breakout from this range. A break above $500 would be a bullish signal, while a break below $493 would be a clear bearish signal. Please remember, this is not financial advice and is for educational purposes only. You should always conduct your own research and make investment decisions based on your own risk tolerance. Thanks for watching Explain the Charts.